Vikas Khemani, good morning. Thank you for joining us. If I would have done a dipstick six weeks ago and would have quizzed everyone, what is your market outlook? Before I finish the question, the answer was markets will remain volatile in the run-up to the election. But look at what has happened. What a comeback by the bulls, and they've surprised everyone.
Absolutely, Nikunj. I think, and if you remember our conversation, one of the things which I had highlighted, or I used that, market will always come back sharply when nobody expects. And I think in that kind of market, the always idea is to keep on deploying, over a period of time, because you would never, risk rewards was very well placed, but the catalyst to the turnaround would obviously, nobody can time it out. And I think that is what has kind of happened. And I think if you see, 2 or 3 things have changed in last, couple of weeks. One, I think, which is very major, which I think probably can be, ignored, is I think global scenario has changed, especially around the, the Fed statement being dovish and around the liquidity scenario. And that's, I think, very important, from a global sentiments perspective. Secondly, I think we have had now election being one of the biggest event ahead of us, which most people were worried about. There were all kinds of speculations being made. I think all of us in the market expect continuity of the government, and I think at least it has gone closer to that. We don't know till the outcome is done. We will never be able to guess, but at least right now market is hypothesizing that continuity of this place is more real than what it was before. And thirdly, I think locally also, with the global clue that the interest rate environment has started falling into place. I think new RBI governor, in my opinion, has done a great job in terms of calming down the whole system, because we were kind of recovering from the ILFS aftermath, and for a long period of time it was getting worse and worse. I think, in my opinion, new leadership has done a great job in calming down, settling down, and I think these 2-3 things, in my opinion, coupled with the flows towards the emerging market, I think has helped us reviving. And but it is always sharp in this kind of environment, is because there are lots of shorts which are waiting to cut. So so it is always first a little bit of buying and backed by the short covering. So this is not first time we have seen, and this will continue to happen. But good part is that market environment sentiment has definitely changed, and I think this is a good situation to be.
Would you be in a long-only mood in the run-up to the election? Do you think the party has just about started, or it is time to take 10% chips off the table, raise some cash, because the risk-reward ratio is not that favorable? Because let's be real. I mean, today we are feeling excited because prices have gone higher. But whether it is elections or valuations or earnings or the visibility on the global front or the trade war issue, that's not sorted.
So I think, Nikunj, I don't know how to play, in a short term from election to run up to elections and all, because I think it's a very, binary kind of event. I believe that, my personal view is that I think the government is coming back, whatever little bit understanding of I have politics. But anyway, you can never take a call. All you can do is to manage your portfolio and your own risk. So I have been long believer that, you should deploy money right now over the next 3 to 6 months in a systemic manner, because risk reward of investing in Indian markets are very well in place. I do believe the Indian economy is very well on right track. I think lots of structural reforms have been done, and I think we will start seeing the fruits of that coming through soon. Secondly, I believe in what you just repeated a little before started talking to me about Mr. Jhunjhunwala's statement. I think if you believe that India's story is good, you remain optimist and you pick up right and good businesses and stay through invested, even if it's short term it disappoints you, you have to take a hit, or for some macro reasons, markets come back, stocks come back, and that is the way to go about it. And I will continue to believe that India is a great story. We have a much better future ahead of us, and we have just begun. So I think next 5 to 7 years are very, very good. We had a very bad setback in the recent past that has reset a lot of bases, that has cleared the throat. In that sense, markets is much better placed than what it was before. So yes, of course, people have taken a knock on their portfolios, on their wealth, but I think there's no point in living in the past. But I think you have to rebase, restart, and I think as I look forward, I think next 4 or 5 years looks very, very interesting.
Sure, Vikas, that you will enjoy the new ET Now Digi series on Rakesh Jhunjhunwala's originals, because he not just says that, he says a lot more stuff, and the way he puts it tends to be very interesting. But Vikas, let's talk about the market at present. We're seeing a lot of leadership coming in from banks. Does that, give you comfort? And what's your stance on the overall growth outlook for banks?
Absolutely, and I think BFSI is a segment accounts for the large part of the market cap. Secondly, very, very critical for the economic growth, and I do believe that that will continue to deliver. You cannot aspire for India 7, 8, 9% growth and make money from Indian capital markets and not be part of banks. I mean, that's like impossible. So it will be a leading sector. There's no question on that. Also, for revival of the credit cycle, I think banks, confidence is very, very important. So I think I'm glad that markets are reposing the faith, and bank would lead the rally, in my opinion. There's no doubt on that. Of course, it's not only bank, it's the entire segment, and you will see, I mean, in last 2-3 years we have seen market diversifying within BFSI space to many more players, and you will continue to see that happening over the next 5-7 years. But I have no doubt in my mind, being almost 30-35% of the market cap, that banking sector, BFSI, the entire basket will do well. And even if you take 7-8% growth adjusted for the inflation and shift of market share from private PSU to public, this sector can grow at 18-20% growth in a reasonably for a reasonable long period of time. So I think that gives me confidence that this will probably one of the big sector which, given what reforms have been done in the past in terms of in form of IBC, RERA, GST, I think this sector benefits the most from all the reforms which has been done, and hence my confidence in this segment would continue to remain very high.
Vikas, hi, morning. Just looking at the currency strength right now and what a solid move it has been. We're already sitting at what, 68, 67 odd kind of levels. Would you say it's time to maybe profit take when it comes to IT? IT has had a solid move. It's lasted us over a year now. But do you think because of the currency move that trade could get challenged and it's best to take your profits off the table then?
I would say that risk reward of moving out of has started beginning. I mean, I think falling into place. I think probably there are other sectors like banks and industrials and consumer which probably would outperform, in my opinion, over the next couple of years, for the simple reason: I think global growth is slowing down. While current outlook and order book of IT companies look good, but if you kind of look, a market typically tends to look forward. So if you start looking forward, probably you might, market will start hypothesizing a little bit of slowdown on the demand outlook as the global growth slows down. And I think that could be worrying. And secondly, you will have, rupee, which is also going to create a little bit of impact on the margin. So I think what was working as a kind of tailwind over last, 2-3 years probably could turn a little bit of a mild headwind. I wouldn't say that sector is going to go decent well, will do decently well, but given the valuation, given a little bit of mild headwinds, I think you are better placed in some of the domestic oriented stories. If you have to keep, I think IT, it will be more as a defensive and I think hedge against a kind of portfolio, then you can keep some option. But I think risk rewards are definitely shifting in favor of domestic place.
Open about what is happening in this sector, and the stock is down 180 rupees right now. That's not like a big straight line fall, but remember, it was the 10,000 rupee plus stock at a time when Nifty is at an all-time high, nearing an all-time high. Maruti is nowhere close to its all-time high. Eicher Motor is nowhere close to its all-time high. Most of the FMCG companies are nearing their all-time high. And what amazes me is that if this market has made a comeback largely because of this assumption that local interest rates will not go higher and demand will come back, then why autos are underperforming? I mean, if there is meat in this argument that interest rates will remain low, then autos should pick up. But Maruti today set cat amongst the pigeon when they said that, look, we are looking at a production cut, because for us a lot of sale triggers which was coming from an Uber or an Ola, taxi aggregators, those sale points have now become pain points. Vikas, would you buy autos in this downturn? Because if markets are rallying with the assumption that interest rates will remain low and liquidity and demand will come back, then auto should make a comeback.
I think, Nikunj, if you analyze auto is coming from a very high base growth profile. I mean, very significantly high growth sort of background and a very high base. And what we are seeing in Maruti and some of the cases is a result of that. And I think ILFS crisis obviously kind of added a little bit more to it because of shortage of credit squeeze to this segment. Auto is a sector which gets impacted more from the availability of the capital and the cost of capital. So I think both probably along with the high base has impacted the segment, and that's the reason you are seeing what reactions you've seen. And Maruti and Eicher grew very, very rapidly. I think that has got corrected. I would say auto will remain as a sector which will do well. There's no doubt on that. When to pick is a question. I would say that still probably a few more quarters you should wait and watch, before because their stocks are still not cheap. They are reasonably valued. They are good companies. There's no doubt on that. But I think market's faith will not sort of come back immediately from revival perspective till the time you see the volume growth coming back. I think, and that is where I think probably you will have to wait, in my opinion, over next 3-4 quarters and pick the right time when the revival is around the corner. But I think in CV space, players like Ashok Leyland can do very well. I think in next, as the credit supply sort of eases out and the interest rates come down, you will see that segment getting impacted. First from positivity perspective, then I think cars.
Because just looking at the way OMCs are moving out, and IOC for instance has gained over 5%, the most since 22nd February. What's fueling this fire for OMCs at a time when crude prices are sort of spiraling up?
Honestly, I have not been tracking much of that, but the only probably intelligent guess I can do is maybe this is because of dividend yields which are around the corner. Most of them are high dividend yield story, but honestly I haven't really tracked in terms of what's driving fueling this particular sub-segment.
Purchase, Vikas. In this downturn, when it happened in the month of Jan and March, a lot of mid-cap stocks were down 10, 15, 20%. What did you buy in that leg of decline?
I think in that space, lots of interesting stories, especially in mid-cap space, became very attractive. One of the space which I have always believed is, building materials, came down very, very, sharply. And, you could, buy a lot of stocks which were kind of earlier sought after and corrected almost 40-50% in last, 7-8 months. So I think they were kind of reasonably well placed. Chemicals as a sector, while it did not correct much, but I think stocks were available reasonably good price, which have already kind of pushed up. Within NBFC space, which I always believe some of the NBFCs which were well capitalized, diversified, owned by corporate houses, because those business models are going to be very, very robust and sustainable. So I think those are very, very interesting place to look at. So I think there's a very wide variety of stock sectors you could look at, in my opinion, in mid-cap space. Of course, you have to do work, but I think some of these 3-4 sub-segments we looked at very, very aggressively.
Okay, Vikas, great to have you on the show. Thanks so much for taking the time out and speaking with us today.
Pleasure.